550s here, long 225.50. Our target is 26.75 for the first contract. And we'll set the second contract in a second. All right, there's the fill in the first contract. The second contract, we're going to set 10 points above us, which is 35.50. Of course, is a new strategy. We'll see if it works. We're also going to adjust our stop strategy. We're going to put our stop 2 points below our entry after we get our first point of the quarter. That way we're only risking 3/4 of a tick if the market actually pushes lower, but still gives us a little bit of breathing room. Well, we got stopped out 23.50. We're taking the 23.75s long, 223.75. We're almost at our first target. We did get filled at 25. We were underwater a little bit at 21. We're not using a hard stop here. We have our target set 10 points above our entry, which is completely different than what we did in January. We're going to see if holding for the rotation back up, since our rotations are in the general periods close to 10 points, 8 to 10 points, we should be able to get a 10-point target if in fact we got the asymmetrical low in the I period. So we're going to stand tight here. We're also recording a tighter screen. We'll see if that makes the video resolution any better on YouTube. Our stop here is set at break even at 23.75, same as what we did in January. Well, actually, let's change that. Let's put our stop 2 points below like we did on the previous trade. We lost 3/4 of a tick, but let's see if that works here on this one. That puts our stop at 21.75, 2 points below our entry, which means if we get stopped out, we'll lose 0.75 ticks times 2 contracts. Well, it bounced up to 30. You can see it on the edge of the chart there. Hit 30 on the ask. Our target was 33.75 for 10 points. Boy, that's the kind of trading that I'd like to do. You know, today we made the same mistake as the other days. You know, we tried to buy the consolidation. It's an amazing thing, all the work that you can do, you know, with the site, archiving, productions. You would think you could change the behavior relatively quickly, and that's proving to be incorrect. Now, I think there's light at the end of the tunnel, but it's an interesting phenomenon to archive, you know, this, you might say, empirical data, because it is proof of the challenge for change. Well, we're moving here after consolidating in a line in the 25s through 27s. We set our target 10 points above our entry from 23 at 33.75. The point of control is 31.25. If we get to the point of control, the probability, in my opinion, we're going to test the other end of value up near the 37s. So I think our 33.75 is a good target. Be interesting to see where the market goes, but we'll take that if we can get it. It's also right under the F period high. The F period, the G period, the H period are all within that price range, 33 to 34. Be interesting to see the market action up there. We're also consolidating in yesterday's value area. We're right at yesterday's point of control, which is right near the point of control today at 31.25. Yesterday was 32. So we're definitely, in my opinion, forming a cluster here in consolidation. Could be a bottom formation leading into next week. I'm going to let the tape run here a bit and see if we can get our 33.75 fill. We're pushing the point of control here. If we break through the point of control, we should test the upper region of value, even above our target. See some cross trade up here occurring. Hopefully that's not enough to keep us from getting to 33.75 soon. The market seemed to die right here. Hardly any trade at all. No action. A little bit on the pullback column. A little bit here in the cross trade 16 to 1100 column. So hidden the bid here. That 13 to 1600 trade forced some sellers into the market. There's a reversal column. 5 ticks from the high. It'd be nice to, if you were a very active trader, to figure out how to trade. You know that I see that a lot. You know, if you got filled on the bid, you know, maybe 31 and a quarter. If you were lucky, 31, you might get a point. You'd have to be pretty quick. It's all the way to 30.75. You know, you'd have to almost have the limit set at 3/4, half a point, 3/4. If you did that consistently, you'd make lots of trades. You'd make lots of money. Relatively low risk in the S&P with a 5-tick reversal. I think it's like 70 or 80% of the time the market, after moving 3 points, will reverse 1.5 points. And certainly, you know, if you're taking a half a point or 3/4 of a point is within that statistical deviation. Well, we're going to pause the video since we're dead here. It's starting to move a little bit now, but on light volume. We need to get above this 31.75, 31.50 area. If we can get above here with no more cross trade, no more selling on a limit, then our next stop should be somewhere up around the 33s. We're going to pause it here and wait for a little more action. We're still waiting here. We did pull up a 3-day, I think it is, 3-day distribution, and the next volume cluster is up in the 36, 37, 38 area. It's actually the CDE period before the E period broke. The high volume point of that cluster is about 37.75. That would be about 4 points above our current target at 33.75. I'm very tempted to move that target up. Matter of fact, we are going to move it up, and we also have a trailing stop strategy I'll talk about before the end of the video. Well, I'll mention it now. Trailing stop strategy is once the market moves 6 points above our entry. This is when we're talking about the second contract, because our first contract's already off. Once the market moves 6 points above our entry with the second contract, whatever the new high in that move is, our stop would be 6 points below that high. So as it makes new highs stepping up, our stop is 6 points below the newest high. We'll see how that works. And we'll set our target in 37s. Well, there's our trailing stop hit at 26. So we were out of the market there. Got 1.25 on our first contract and a couple points on our second contract. That's a shame. We came within 2 points of our target.